Okay. So let's start. So today we are discussing top-down analysis, so that you can maximize trades that would yield a lot of money, like swing trades and all of that. Okay. So with top-down analysis, you have to be starting your analysis from the weekly time frame down to the daily, down to the 4 hour, to the 1 hour, which you can use for entries. You can also use the 15 minutes for your entries. Okay. And we'll be using the 1 hour for direction purposes or the bigger picture, and also to identify what price is seeking for on the weekly time frame. And then when you go down to the daily time frame, you are looking to see if the daily supports the weekly idea. If the daily does not support the weekly idea, then you try to find out what the daily is seeking. Let me admit someone. Yeah, so you try out to find out what the daily chart is seeking, because there could be a possible short-term liquidity pool that the daily is seeking, or possibly a fair value gap that the daily is seeking to fill before the weekly continuation. Okay. So when you go to the daily, two things that we can do there. One is to have trades that are in line with the weekly direction, which will be the best condition. And we may also have a counter trend move on the daily, where probably the daily has shifted against the weekly, possibly trying to fill in a weekly imbalance or take liquidity pools on the daily chart. So we are going to start with the VIX10 index from the weekly chart. Okay. So looking at VIX10 index on the weekly chart, what do you see? What is the market's direction? I want everyone to tell me. What is the we are bearish. Okay. Yeah. So you can see that we are making a series of lower highs and lower lows. Okay. And currently price is bearish. You've broken below this low. We have this huge bearish order block, right? Now let me go to the monthly time frame and I'll show you why the price is bearish. So on the monthly time frame, you can see that price came all the way up to this bearish order block, which was in premium. You can see that for a long time, price has not come to that order block. We also have this fair value gaps that price filled in. So we hit this bearish order block, and ever since price hit that bearish order block on the monthly, price has been what? Bearish. Okay. Price has been bearish on the weekly. But we need to look at something here on the monthly. What is the monthly market structure? It's bullish. The monthly broke structure above this high and then this high. So monthly is bullish. And then price has pulled back all the way to discount. So we should ask ourselves, what is price reaching for to the downside before a possible move to the upside? That's why we should ask ourselves. And looking at it, we have seen that price has closed in on this bullish fair value gap, right? Price has closed it in completely. So the next level that I'll be looking for is this bullish order block. Okay, this down close candle. That's the next draw on liquidity on the monthly. I'm looking for the possibility of price coming to this bullish order block on the monthly chart before a possible monthly continuation. Okay. So we have a draw on liquidity. The monthly is bullish, but the weekly is bearish. So if the weekly is bearish, what is it seeking for? It is seeking something on the higher time frame, which is the monthly. And it is seeking for this monthly bullish order block, which broke structure up here. So price is yet to hit that monthly bullish order block. So on the weekly chart, which is still bearish at the moment, yeah, the weekly chart, which is bearish at the moment, we can still look for what? Sells. And what is the target? The target is the monthly bullish order block, which we marked. And when, as you can see, when it comes to the daily chart, the weekly time frame, the order block is what? 2 down close candles. So that's why I said when it comes to order block, it's not always one single candle. Okay. Because if you have an order block on the 4-hour chart, when you go to the 1-hour chart, it may be 4 candles forming that one order block. So we have these 2 down close candles forming the monthly order block. So we are expecting price to dip in here. We have this fair value gap. You can see I have this black line. Let me admit someone. So yeah, we are looking at how to do top-down analysis, right? You can see I have this black line. Let me maximize the size a little bit. It's too tiny. Where is it? I think I have to go to the monthly. Oh, it's on the daily. Oh, okay, yeah. Okay. So that black line you see, when price was coming down, selling, that was my first target, right? You can see we've been selling VIX 10 for this week. We've been selling. We had 2 beautiful setups forming on VIX 10, and we've been selling VIX 10. So as we were selling, my first target was that level. Okay, that's a fair value gap. This candle's low, and then this candle high. So that was my first target as we were selling. So with this higher time frame target, I knew that the long term, I wanted to see price come all the way to those areas. So I was confident with my sell bias. But then we're taking short-term profit targets down the road. We're taking short-term profit targets down the road. So we know that the weekly is bearish, but the monthly is bullish. So if the weekly is bearish, what is it seeking? It is seeking to mitigate something on the monthly. And we found the monthly order block, which is these 2 down close candles. But on the weekly, we also have this fair value gap. So the first target has been met, which is the fair value gap. So next week, what is your bias? What's the expectation? What is your expectation Monday to Saturday, looking at this chart and what I've explained? We are forming a bias. So what will be your expectation? Then the levels that I've put in. You can unmute yourself and talk to me. We are learning together. So yeah, talk to me. I have to involve you guys so that when you are doing your personal analysis, you'll be able to do this thing. Yeah. Okay. Yeah. Talk to me. Yeah, continue. Talk to me.
This fair value gap, I can look for short-term buy into this order block for a continuation of sell.
Okay. That's fine. Any other suggestion? Talk to me, guys.
Yeah.
Yeah, good evening. Please, bring your microphone a little bit closer to your mic. Yeah. It's likely not to. Hold.
Hold price.
Okay, you're expecting price to continue to sell all the way to the lows. Okay.
But that so if I'm like from the monthly
Mm-hmm.
lower, my
We still can't hear you clearly, please.
um, I feel
Make the mic a little bit stable and then speak into it.
makes me sorry. Report before, so I guess that's why. Is it audible now?
Yeah, very, very, very good now. Talk to me.
Okay, sorry, it was my report. Okay, so what I was saying is that I feel it's actually going to sweep below from the monthly time frame
Okay.
because if I'm supposed to like take my PD away from the monthly swing guys and swing lows, I feel my discount is still below this swing low.
The one I'm pointing?
That has yes.
Okay.
Is so I still feel okay. Probably market is going to sweep that low
Okay.
and then just lower. So
Okay.
I'm fully bearish on it.
Okay. Okay, that's fine. Any other submission? Quick.
Okay. Listen.
Yeah, Simeon.
Okay. Yes, sir. I think from my own observation, and we know that the long-term draw liquidity is down. We know. But most of the market does not just go straight like that to the draw liquidity. You just do some stepping moves first. And I believe for almost how many months, and the market has been selling. There is every high probability that if you see that other block here, there may be some certain level of reaction. There may be some certain level of reaction to pull back the market a little bit before we look for another continuation.
Okay. Okay. So you all have made very, very good suggestions. And the first guy that talked, I think Innocent, right? Innocent said he would like to see. Let me open this up. Okay. Come on. Okay, Innocent said he's expecting some form of reaction within that fair value gap on the weekly to push price up before probably going down to hit the other block. That's a very good observation or assumption that can happen. So we can expect that. Okay, we can expect that. So that's one expectation going into this week. Possibly, price is already reacting from 50% of the fair value gap. So price can react, push up a little bit into some levels on the daily charts before selling to this black line, which is the monthly order block. That's perfect. Now, there is one observation that I've seen that can also happen. Price can continue to sell Monday, Tuesday to hit this bullish order block before rejecting to any levels on the daily charts. Okay, that's another thing. Now, price can even go, if price can close below the fair value gap, use it as resistance to also sell to the second order block here on the weekly chart, the opening price. So these are all possible things that can happen. But keeping in mind, though the weekly is bearish, but we are in a deep discount on the monthly chart, and we are hitting monthly discount arrays, which can definitely give price a reaction. So coming into this week, my bias will be much more focused on the daily and then the 4 hour, because price can both be bearish and then be bullish. We don't have one-sided market because price has hit all the targets within this price. Now the only target left is this lows that some of you guys are already expecting. Now for me to expect these lows to go, let me go back to the monthly. For me to expect or believe that these lows are going to be taken, I need to see price closing below the fair value gap and also 50% of this bullish order block. If price can close below 50% of this bullish order block, the body, I'll be very, very much convinced that these lows are going to be taken. But if this fair value gap and then this order block is respected, then I think the monthly bullish structure is going to continue. So it's a game of probabilities, but you need to know all these variables so that it wouldn't take you by surprise if price decides to play out in a certain way. Okay. So as I said before, because we are in deep discount on the monthly, and though the weekly is bearish, I don't have a clear bias on this coming week candle. Now, the reason why I'm starting the analysis from the weekly is because once you have a clear bias on the weekly time frame, I hope you guys can still hear me. I hope you guys can still hear me. I hope you guys can still hear me.
Yeah, we just came back on now.
Oh, okay.
We are not actually seeing your screen. Okay, it's back.
The screen is back.
Yes, it's back.
Okay. Sorry, I think I lost connection. So I was saying that sometimes you may have a clear weekly bias where you know that clearly the weekly is going to move from here to here, one side. So that one, it makes it easier for you for the whole week. You know that the whole week I'm looking for buys. But there are other conditions like we are seeing here where we don't have a clear direction for the week. We don't know if the weekly candle will close bullish or bearish. We don't know because though the weekly is bearish, we are also inside a monthly discount PDRA, which can cause price to be bullish. I hope you guys understand. Okay. So now it means that since we don't have a clear bullish, a clear direction on the weekly chart, we should be using more of the daily chart and then the 4-hour chart to determine what price we do. So if we get any bullish reaction, we can look for liquidity above price to buy to. If we see any bearish direction, we can look for sales to sell to the monthly order block opening price. Okay, that's very important. Now I want to mark the lower end of the monthly of the weekly order block. Okay. So we have the weekly fair value gap, and then we have the monthly order block. Now let me make the monthly order block a little bit thicker. Okay. Good. So we know our levels. Now let's go to the daily chart. And we have the possible narratives put in place. Okay. And since we are day traders, we are focusing on the daily moves and then the weekly moves. I know some of you are looking to see price go to all the way to the monthly low, but that's a long-term draw on liquidity. We want to be focusing on the current week we are entering, how we can tackle price. Okay. So coming down to the daily chart, the daily is still bearish. Okay, still bearish, which is in confirm. Let me quickly admit someone. Okay, so the daily is still bearish, which is in conformity with our weekly direction. But as I say, we are in premium. We are in discount levels on the monthly chart. Okay, so looking at the daily chart, a couple of things price can do. Okay, a couple of things price can do is that you can see that we took this highs. That's buy side liquidity. Okay, so we took those highs and then please mute yourselves unless you are talking to us. And then we have this low that price broke structure below. Okay. So what does price makes this thing that you see here? We took this high, we broke structure down here. What does price makes this thing? What would you call this thing here? Talk to me, talk to me. A breaker block. Very good, very good, very good. So we have a breaker block because this was a bullish order block that was supposed to hold price after taking this high, but it fails and we break below it. So going into this week, I'm very, very much interested. Please mute yourselves. Please mute yourselves. Who is talking? Let me see. Emmanuel, please mute yourself. And okay, thank you. So yeah, going into this week, I'm very much interested in this level, this breaker block, the opening price. So I'll extend it all the way to the right side. I'm trying to make this thing straight. MT5 is very difficult to use. Okay, good. I'm looking at that breaker. Come again?
Okay, I said from here, since we understand the weekly, can we continue on trading you to make it easier?
Don't worry. I'm trying to familiarize myself and with this to make it easier going forward, because I want to be using MT5 the more. So breaker, and then look at what we have here. This bullish candle, what does that make it? It's a bearish order block, right? So we have a bearish order block inside the breaker. Now, this bearish order block, since it's an indecision candle, I'm interested in the wicks, okay? And if you've watched the video on inefficiencies, which is on the mentorship lessons, I have a video on it on inefficiencies. You realize that wicks are also inefficiencies, okay? Just like fair value gaps, okay? Wicks are also gaps. So the wick is an inefficiency. And normally, when you're dealing with wicks, you want to be considering 50% of the wick. Look at this wick, this long tail here. Price came to 50% and it sold off. Let me mark 50 Fibonacci to see. Okay, this one, it didn't reach 50%. But you can grade the wicks just like you grade fair value gaps, 25%, 50%, and then 75%. So wicks can be graded just like fair value gaps can be graded. And price can react from the 25% region or 50% region or 75% region and then turn around. So wicks are gaps. So going into this week, I'm also interested in 50% of this wick that I've marked right here. I'm also interested in this fair value gap that price has formed on the daily chart here. So since I have two-sided direction, which can be bearish or bullish, I need to mark all my levels up and down, okay, up and down. So those are the levels I'm interested to take any possible sells when it comes to the daily chart. Now, areas where I would like to take possible buys, okay. 50% of this fair value gap can give some possible buys. Oh, here's my Fibonacci. Okay. And right now we are already reacting from 50% of the fair value gap on the weekly to the tip.
This question.
Come again? Question. Yeah, go ahead.
Yeah. The fair value gap that you are marking the 50%, is it the weekly fair value gap or the monthly fair value?
No, it's a weekly fair value gap.
Thank you.
So let me go back to the weekly chart. Right there, it's a weekly fair value gap. Okay. This candle. This. I hope you can see it now. So that's a weekly fair value gap right there. No. 50% can reject price. So that's one level that we can have a possible reaction from. On the daily chart, we'll go to the 4 hours soon. Then if price close below 50% of that level, I would like to see it using it as resistance to come to the fair value gap low, this line. And then we have this big line here as the monthly order block opening price. So if only price closes below this fair value gap midpoint, then I would like to see price using it as resistance to continue selling down to these two levels. But if price rejects like we are seeing here, we are rejecting to the exact T. So if price rejects here, then I would like to see price coming all the way to this fair value gap here before I look forward sells. Either this fair value gap, this wick 50% or the breaker block here. Okay. Now let's go to the 4 hour chart. Now going to the 4 hour chart. This high is definitely a possible liquidity high. Okay. Liquidity high. So if only price continues to reject here and we don't close below the midpoint on daily chart, I'll look for confirmations on the 1 hour chart to take price to that high as target. And I'll just be watching to see what happens around here, these levels that we have here. Okay. But if price closes below 50% of the daily fair value, the weekly fair value gap, then I'll be using that 50% as well as this order block to look for sells all the way to this fair value gap low and then the monthly order block. Okay, so these are the scenarios I am waiting. So the weekly candle is closing today, 12 midnight, and a new weekly candle will be opening. Okay, so today I'm not taking any trade. Normally I don't want to trade on Sundays because Sunday can be very, very tricky and choppy. Okay. So this price action has been today's price action. So I'll just be watching to see what happens. If only we close below, then I'll be looking for sells. Already the 1 hour has shown some nice bullish momentum, creating this order block. So if only we reject and don't close below and take this low as liquidity and reject, then we can come for this high as liquidity. And we have this huge 1 hour imbalance from this candle's low to this candle high. That can be a target. So as soon as we hit those levels, which are weekly breaker blocks, monthly, daily order block, breaker blocks, and then 50% of a wick as well, those can also, areas can reject. So that will be liquidity grab into those levels, which can let price sell down to these levels. So the scenario is either we close below here, come back and use this as a breaker to sell down here, or we reject here, we look for buys towards this level, and then I will look for sells towards these levels. But if price gets here, decides to blow through all these levels and then these highs, then the monthly may also be shifting bullish. So these are the possible scenarios. Now in these scenarios, you need to, if you get any entries, you should be risking less, okay? Because you have so many probabilities around price. Price can do this, it can do that, it can do this, it can do that. Okay, and price can fake you out and do what it really wants to do. So when you have so many probabilities around your bias, when you get an entry, it doesn't matter how nice and clean the confirmations are looking like, you should be risking less. Okay, and this from ICT, our boss. So you should be risking less. But in a situation where everything is in line, you have cleared bias for the week and direction. When you get the entry, you can risk your mask and hold it all the way to the weekly draw on liquidity. Okay. So we are done with verse 10 on what you want to see or expect for the week. If you have any questions, you can ask me. If not, we can go on. And one thing I need to say is, you know that when the weekly candle opens, it definitely creates. Let me draw candle here. So let's say this is a weekly candle. If the candle is going to be bearish, it's not just going to open and go bearish, right? It's going to open. Let's say it opens here. It's going to go up to seek some liquidity of the highs, then reject and sell all the way to create the low. Okay. So you're definitely going to have some wick on top. After reaching its objective on the downside, it's going to reject to close. So definitely the new weekly candle is opening on this vertical line. It's definitely going to create a high. Normally the highs are created on Monday. So Monday is another day of manipulation. Sunday is when the weekly candle is closing. Monday is when we have a new one opening. So these 2 days, I take it very, very slow. And I don't want to rush because these 2 days are full of manipulation. So the Monday can start going up to trick everyone that it wants to be a bullish week. Then it will take buy side liquidity into these levels and it will start selling to come to these levels. And after these levels, it can reject and it will create a candle like this. Okay. So definitely we can expect Monday to start being bullish. But I would like to see this low being taken to fuel the move to this high and then to these levels here. If you don't have any question, then we can move on. I hope it's understood.
Yes, quite well understood.
Yeah.
I've actually been trying to avoid big stage because the price action has actually been choppy. So.
Oh, but have you forgotten this beautiful trade we took yesterday?
Oh yes, I missed that. I wasn't online. I saw it.
Yeah. So the.
Well, it was a breakdown.
Yeah. I didn't, but this is exactly what I was looking for. My first target, my long-term target has been this fair value gap on the weekly chart. So as you can see here, we got. I think we had an entry. Yeah. Last 2 days, we had some nice profits, and then yesterday. Okay, yeah. Last 2 days price action is here. We had some nice sell from there and took some profits down here. And price came back and I said, I want to see one leg expansion to the downside, right? That's what I said. And the reason why I said that was to see this fair value gap being filled, okay? As we got very, very close to it and started rejecting, what it did was to create retail resistance, right? So the retailers will draw resistance like this, right? First touch, second touch. So they'll be looking to buy the third touch, which gave them some short-term reaction on the third touch, but it took them out because we have this fair value gap down here. So that's why I gave this signal to sell one more time. I wanted to see that fair value gap being filled. So when it comes to trading, it's not just about, if you want the simple strategies, they are there, okay? But if you want to be a really good trader, you need to understand the market top down. You have to understand the elements of this market movement, why price is going here, why price is going there. And when you take a trade, you can be really, really confident. There are trades I risk a lot on it, and there are trades I risk very, very little. And this trade I risk 10 lot size, 5 each on it yesterday. And I took my profits within the fair value gap here. So the targets have been met, and as I said, we can start rejecting or we can continue. So I've given you the scenario and what I want to see before I sell and what I want to see before I buy. So if tomorrow the new candle opens, take this low, and on the 15-minute chart starts breaking bullish, I'll definitely look for buys towards this level. But when we hit these highs, take buy side into this level, I like to see the 1 hour breaking down, and I'll look for sales again to these levels here, and then the monthly level. So can we continue now to verse 25? And then trust me, this top-down analysis is no joke. It takes a lot of thinking and a lot of addition and subtraction. So you don't have to be looking at 20 pairs. No. You are going to lose focus on what you are even focusing or looking at for the week. Imagine looking at 15 or 20 pairs. Whatever you analyze on verse 10, by the time you come back, you've even forgotten. So just keep it. So these are the only indices I trade: 1, 2, 3, 4, just five of them, the basic ones. Okay, that's all. And if I can catch one big move for the week, I'm okay. I'm okay. So let's look at verse 25. We're going to start from the weekly time frame or so. So verse 25, my targets have been met on the weekly time frame. I was bearish, very bearish. We took this low. Immediately we took this low, I knew price would definitely come for this low. So that low, I have a 10 line on that low. So that was another draw on liquidity. We hit that low and we also closed below that low. So my next draw on liquidity was this low, which we've cleared. Okay. And we have this low as well, which I want to mark. I don't know if price may reach for it coming into this week. I don't really know. But looking at how we are rejecting, it seems we may reject from these lows. Because these are relative equal lows. This low and then this low. That's relative equal. And as we've grabbed them and we are rejecting, there's a high chance of price pulling back to this bearish order block or this breaker block here. So we took this high and broke this low. So this is also a breaker block. So early into this week, I like to see some possible bullish move. The only reason, I know that we are bearish, right? We are bearish, I know. But what did I say about counter trend trade? When liquidity on the higher time frame has been taken, it is valid for you to frame a possible counter trend trade if only you see confirmations. So we've taken relative equal lows. And we have a breaker block resting here. So definitely when this candle closes, it's gonna form a fair value gap. Abraham, please mute yourself. I can hear myself when I speak. Okay, so Abraham, please, if you can hear me, mute yourself. So we can have a possible retracement into this breaker block. Abraham. Okay, let me see if I can mute him. I don't have that option. Oh, okay. I've done so. So we can definitely form a retracement bias. Okay. And look at how the weekly candle is rejecting a whole weekly candle from this week Monday to today Sunday. Look at how the candle ended. Lack of momentum to the downside. Okay. After seeing this strong bearish candle, we expect the next one to be strong to the downside. But look at how the candle is ending after clearing this relative equal lows. Already rejecting. So we can possibly frame a counter move to fill in the fair value gap that will form when this candle closes. If price continue to be strong, the next target will be what? This breaker block. If price continues to be strong, the next target will be this bearish order block. Okay. So early into this week, Monday, Tuesday, Wednesday, I would like to see a bullish move. First target will be this week, this candle's high. That would be previous week candle high. Okay. That would be my first target. If taking that high and price does not reject, then the next target will be here. If price still shows strength and doesn't break down, then the next target will be here. But if price gets to this previous week candle high and fill in the imbalance and touches the breaker and starts to break down on 1 hour, 4 hour, then I'll be looking for sells again to this low on the left here. But if that does not happen, then I'm bullish. Gotta admit someone. Okay. Okay, so any questions so far? So we can go to the daily chart to see if the daily supports our analysis or bias for the week. Okay. So we are already looking into a bullish week. Okay, we are already looking into a bullish week. So for yesterday and today, price is rejecting indecision candles. And what do you have here? A bearish order block. And then this black line you see here is a breaker block on the weekly charts. So I like to see price buy towards those levels. And then probably Friday, Saturday, and Sunday reject to create a high. Even if price is aggressive, it can come for these highs to completely fill in this imbalance. But I wouldn't go there yet because the daily is bearish. And then the weekly is also bearish. We are only taking this counter move because we've taken a higher time frame liquidity pool and price is rejecting. So what I will need to see for confirmation, I like to see 4-hour breaking bullish. So daily to what? 4 hour. I like to see 4-hour breaking bullish. So as you can see, we took previous day's low and price is pushing up. Initially, we are kind of respecting this fair value gap. So if price can close above the fair value gap, break structure here, then we have a breaker block here that we can see price using to spring to this level that we see here. Okay. So I would like to see a break of structure on the 4 hour of this high. So if price breaks structure there, then we may have a breaker block here to frame our setup. So we break that high, retest the breaker, or retest anything in this inversion, anything that I want to retest in this count. Then we can go to the 15 minutes and then on the 1 hour to look for our final entry confirmation to buy towards that level. So I like to see this high being broken. Okay. And there's also a counter trade. So when we get entries, it's advisable to minimize your risk and not go full risk. If you normally risk 2 or 3%, you can risk 1%. So yeah. But it's very likely that price will sweep that high into premium of this range before any sells, like I've outlined. So that's the expectation. I know the 1 hour is already bullish, but at least we need the daily to support, and we need the 4 hour to support our daily counter idea before we look for any buys. So I'm expecting these levels to fail. I'm expecting the levels to fail. And if it can fail, then we have a very good level to work with to see price come to these levels. So any questions? And normally when you see, let me show you something here. If you see a candle taking a high and a low, okay, that's an early indication of a possible reversal. So you can see that this candle, we took the low, it went all the way up to take the dark same candle high. So that's like an engulfing candle. So this scenario normally sets a stage of reversal. If you go into price, whenever you see that happening, you definitely see some sort of, okay, this, let me see. Oh, come on. Using this MT5 is difficult. Yeah, so one example is here. Candles were going up, and here the candle took the high, also took the low, and we had a reversal happening right there. It normally happens. Let me see if I can find one more example. We have this bullish example here. So the candles were coming down, and then here this candle, it took the low, it took the high, and we went up. So normally when that thing happens, it can set a stage for a possible reversal. So let's see how the candle close. I would really love to see it closing or breaking that high. So that's all for VIX 25. Okay. Any questions? And normally, when you perform your analysis on Sundays, you need to perform another analysis on Tuesday. Okay. Another top-down analysis. Okay, because sometimes the analysis you've done on Monday can completely change by Tuesday. Okay, you know that by Tuesday, at most by Wednesday, the high of the week or the low of the week has been created, and then it will be expanding in the direction you want to expand to. So Tuesday, you need to reanalyze to see whether the analysis you made on Monday is going to play out, the analysis you made on Sunday is going to play out, or is going to change completely to a different thing. Okay, so when you analyze on Sundays, it's not all. You need to reanalyze on Tuesdays to confirm that the analysis is holding or something else is completely playing out. Okay, that's why I said Sundays and Mondays you can analyze and watch price. Tuesday you do your final analysis before you start actively trading. Okay, so that's all I have for VIX 25. And the reason for these sells, we have some levels on the left. The same thing like we saw on VIX 10. This one too came to an old bearish order block with a fair value gap. That's a very good area. You can see that here we had so many order blocks here, but all of them were mitigated and the fair value gaps were also filled. Here, order block with fair value gap, we came into it and sold. Here, order block here, fair value gap here, we came to it, sold. Order block, fair value gap, we came to it, sold. Here, order block, fair value gap, we filled the fair value gap, we sold. So we don't have any levels here. So all these levels were going to be used as what? Liquidity. The only first level we have that is left open. So we can call it an open interest or whatever you want to call it. The only area that's left open and untapped is this order block with fair value gap. Okay. And it's the fair value gap that qualifies the order block. So that was a strong area. And even though price was bullish at this point, definitely it was going to give a reaction from that level. Definitely. Okay. Once we broke below this order block, I knew we are going to take this low because this order block, it doesn't have any fair value gap. It don't have anything at all. It's a useless order block. So once we violate this important level, order block, fair value gap, just know that this is not going to hold. We are going to use this as liquidity. Okay. So now that we've taken liquidity and we are rejecting, we can have that possible bullish expectation. Okay. At least to the breaker block that I've marked. Okay. So if price hits the breaker block and then price starts to break bearish on a 4-hour, I'll change my bias again and look for sales towards that low. Okay. So right now we are bearish. And then this bullish move we are anticipating is just a counter move. If you have questions, you can ask. So with trading, you have to be a technical scientist. Okay. It's not just about I have the strategy, I'm going to buy or sell. No, it goes deeper than that. Okay, it goes deeper than that. Yeah. Any questions, guys? Okay.
No question.
All right. So let's continue. Let's do this 50. With 50 top-down analysis. I'm going to start from the weekly chart. Okay. So with 50 currently, well, in terms of market structure, what is the direction in terms of market structure?
On the weekly, it's still bullish.
Okay, very good. Okay, very good. It's still bullish, yes, but there is an early indication which you can use to see if price is completely reversing. Okay, that is when the last fair value gap, especially when it is paired with an order block, when we close in on that gap completely. So we have an order block here. We have a fair value gap here. Ideally, you want to see price come and wick. Price can come all the way down, okay, into the order block and reject. That's what we expect, okay. It can even fill the gap completely and reject and start going up. That's our likely expectation. But we don't want to see weakness around such a strong area. This is a very strong area. Look at the move array with this huge fair value gap and an order block. Okay, we don't want to see weakness around this area at all, especially when we've hit another higher time frame level on the left side. On the left side, you can see we've cleared all these highs. Let me go to the monthly. We've cleared a lot of buy side liquidity. A lot. So you can see you've cleared this high and this highs. Okay. Buy side liquidity has been cleared. Okay. And what is resting here? Sell side liquidity. Okay. So this was just consolidating, and we've cleared the buy side. Let me admit someone. Okay. So it was just consolidating around here and price has cleared the buy side. If it's really going to be bullish still, at least you want to see strength around this area. Now look at what is happening. We are seeing continuous weakness. See how this candle blew through the fair value gap. We even closed below the body of this order block. So to me, order flow is shifting. If you've watched my change in state of delivery kind of video, see how this order block opening price has been violated on a closing basis. To me, that's a change in state of delivery. Even though we've not broken structure bearish, but for us to violate my point of interest like this in this strong manner, that's a change in state of delivery for me. We close below it. Okay. So I'm looking to see price come and take the swing low as liquidity. Okay, because we've taken higher time frame liquidity pools, equal highs on the left. Price is breaking down aggressively. We are violating all our bullish PDRAs. We violate this fair value gap, violate this fair value gap in discount, violate this order block opening closing price. So order flow is shifting. Even though we are bullish, order flow is clearly shifting. That's an early indication. So I'm still bearish. I'm not looking for any bullish indications around here at all. At all. I was having a short Zoom lesson with some lady, and that's why I have these arrows there on the daily chart. I'll go there soon. And I was telling her why I was bearish, just like I'm telling you. So going into this week, my first target is 50% of this week, this long week. Okay. And whenever you are trading, you should have short-term buyer targets and then long-term targets. Okay. Well, not always you're going to see price go to your long-term target. So you should always have a short-term target, which is at a reasonable or logical point, and a long-term target. So my short-term target, 50% of that week, as I said, wicks are what? Gaps. Okay, wicks are gaps. So price can come and fail 50% of this week and reject. And if price close below 50% of that week, we're definitely going to see this low being taken. Okay. So going into this week, my first target is this week on the weekly chart. I'm still bearish, like I told you. Okay. Now let's go to the daily to see if the daily supports our idea. So right from the weekly, we formed a bearish narrative. Okay. Right from the weekly, we form a bearish narrative. Now let's go to the daily if the daily supports the idea. Please mute yourselves. Please mute yourselves. Simeon, please mute yourself. Okay, good. So going to the daily chart, after buy side was cleared up there, price starts to break down aggressively. Look at the momentum. And it's not looking as if the momentum is even stopping. It's still moving with momentum. Okay. Even around this level. So as I said, we violated that order block on the weekly, and that order block is also seen on the daily. We violated it, the closing price. So as I said, my first target is 50% of that weekly wick, which is within this order block here. That's my first target. And then the last target will be the swing low. That's my target. Now, order flow is in support with our weekly narrative, which is bearish. So going into this week, there are two areas I want to look for sales. Okay. We have this bearish fair value gap. Very, very nice. I'm gonna draw it perfectly. Good. That's one area I would like to see. I would like to see price come to for me to look for bearish confirmation. If I get any bearish confirmation, I'll be holding all the way to 50% of that week. Price can decide to be overzealous and shoot up. The next level I would like to see is 50% of this week. Okay. And that's another area I'm also watching for the week. So going into this week, I'm watching this area and then this area. I will also mark 25% of the week. So 25% will be around here. Price can also come to 25% of the week. 75. So you can grade the week just like you can grade your fair value gaps. So either 25% to give a reaction, and ideally that's what I would like to see. I would like to see price come into the fair value gap, overshoot the fair value gap into the 25% area of the week, and reject back and close below the gap high. That's what I would like to see. Okay. So the entire week has been very, very, very bearish. And as I said, the first target has been met of that low. This low has been cleared. So definitely we may see that form of reaction back to the area. And since we are starting the new week, if the weekly candle is going to be bearish, it's not just going to open and go bearish. It will open, go up, create a wick, and then sell off. Just like this candle. Today's candle, it opened here, went up, took some liquidity on the lower time frame, like 5 minutes, 15 minutes time frame, and then sells off. Just like this bearish wick. It opens here, goes up, takes some lower time frame liquidity, sells off. So every candle has a wick. Just that some are very, very tiny, like this case. But definitely there's gonna be a wick, right? So since it's a new week, we expect the new week to open, create a wick by coming bullish to this area and then start to sell off all the way first I get to 50% of this level. Okay. And it's very likely price will come to that level because we've taken this liquidity. Price can just decide to just blow through everything as well without coming here. Okay. But basically, I would like to enter from here and hold it all the way here. Okay. If you are going to use the swing trading strategy, you can sell from 50% of this fair value gap and place stop loss here. But this one, I think the stop loss is going to be very, very big because this candle is too big. But if you have a bigger account size, you can still do it. Place entry here, stop loss here, and you can hold for TP1 here and then TP2 here. And that's the swing trading model. If you don't have huge accounts, definitely when price comes here, you can wait for the 1 hour to break bearish to confirm. And then after the 1 hour breaks bearish and it pulls back to the 1 hour premium level, you can use the 15 minutes or the 5 minutes to confirm an entry. Then you can hold it all the way for TP1 and then TP2. Okay. So the reason why we are doing top-down analysis to maximize our profit potential. So yeah, everything is in line with our bearish bias and definitely. And since this level has been violated, that level can also be used as an inversion, right? Just like today, you use it as an inversion. Let me see. Yeah. So price can use it as break and retest. And it's a powerful area. This is not just a break of retest from support or resistance. This is not just any ordinary resistance. This is a bullish order block that had a fair value gap. And it is seen on the weekly. It is also seen on the daily when we blew through it. So definitely you can offer some rejections. And just like you see here, so we violated it on this candle. This candle tested it and it is selling. So we can still test it again, take some short-term previous day's highs into the fair value gap and then sell off. But I'll get rid of that. These are the areas I'm interested in. Okay. So once the daily is in flow, we know that the 4 hour everything is in agreement. So yeah, here I think we are forming some equal highs here. Relative equal highs, okay. That price can come and take into the daily fair value gap. Okay. You can see that after we broke down, price didn't even go to premium. So where's the Fibonacci? So after breaking structure down to this level, price didn't even pull back to premium. We formed this short-term high into the 4 hour fair value gap. And this is what we call institutional order flow entry draw, where we just go into a fair value gap just a little bit and then moves away. So yeah, I'm still taking the whole range, okay, the whole range, and I'm looking to see price go into premium, probably clear these highs into that daily fair value gap where I can look for sales. So until price comes here, I'm not doing anything. I'm just watching price. Okay. There's one thing that you can do. You can continue to sell on the 4 hour. Come all the way to the 50% of the wick first before it will just bullish to this level. If it comes here first and starts to reject, I'll probably look for buys to this highs. But I'll be risking very, very, very little. Okay. Because the overall draw is down here. Ideally, I want to see the new candle open, shoot up to this highs into the daily, and then sells off. That's what I'll be waiting for. So I wouldn't even be looking at the 4 hour. I'll just be looking at the daily like this. I'll just be looking at the daily chart like this. And I'd like to see price come there to sell. Definitely, this point is going to be met. Definitely. At least this 50% of the wick is going to be met. So it's very, very simple here on VIX 50. That's my expectation going into the week. Okay. If you have any questions, you can ask. So I think I've given you a gem here. If all your PDRs in the range have been disrespected and price closes below either 50% of that order block or the closing price, you should be very, very careful about that trend, because there's a high chance that price is price is reversing. We've not broken structure yet, but this is not an area where price should violate like it has done. Okay, so we should be careful. We don't want to see price closing. So yeah, let's see what happens on this 50. Okay. Let me admit someone. If you have any questions, you can ask, guys. So we'll be doing with 75 and then stepping this, and we will be done. So if you don't have any questions, let's move on to the 75 index. Okay. The 75 index price has really played around my emotions here, but I took it very, very easy, and I was just changing my bias up and down, and I'll show you why I was changing my bias up and down. You can see that the weekly is definitely bearish, right? Definitely bearish. And we took the previous week high into a fair value gap and sold off. So this week, I was expecting price to continue to sell off to take the previous week low. Okay, that was the expectation into this week. So on the daily chart, this is just my analysis the past week, and this week that is ending. I'll come to my analysis this week. And then I saw price taking this high, rejected, and then I was like, maybe he wants to be bullish a little to come and fill this gap here, or this gap, because we broke in bullish, and price has rejected this fair value gap beautifully by also respecting the opening price of that daily order block. And I think I shared even the bullish setup with you all. But what I saw is price went to hit the target of this high, but also rejected strongly. So I was like, I changed my bias again from bullish to bearish, because I know the weekly is bearish. So I was like, maybe the weekly wants to continue bearish, looking at this rejection. So I was bearish, trying to look for what sells. But I realized that we've also taken this low, and we are respecting 50% of this bullish order block. So this area that I've marked, the shaded area, that's 50% of this bullish order block. 50% is just here. Respected 50% nicely, didn't close below, and we are rejecting strongly bullish. The bullish momentum is just insane. So now I am willing to take a counter trend coming into this week. I'm willing to take a counter trend bullish. And the reason why I'm forming this bullish idea, let's go to the weekly chart. Even though the weekly is bearish, but we've taken some long-term liquidity pools on the left side, which I'm going to show you. Okay. So we've taken this low. And get rid of this line. Okay, so that's a long-term low, okay? Very, very long term, okay? Then these long-term lows, they usually give some crazy reactions. Okay. So that's a long-term low that price has taken. So price has formed a dealing range. If only price is going to reject, then we can see the possibility of price coming to fill in this fair value gap. That's possible. At least come and work into the opening of the fair value gap. Okay. So we've taken a long-term low, and then the daily has shifted bullish. So that sets a stage for a possible counter move. to premium levels on the weekly chart. We still know that the weekly is bearish, but the narrative is that we've taken some long-term low and then price has broken bullish on the daily. So if so, we can definitely frame a bullish bias to take this high and possibly come to some fair value gaps here, and also the fair value gap on the weekly chart. Let me mark the weekly. I'm actually interested in this bigger gap. Okay. I'm interested in this huge fair value gap because price moves for two reasons. The first being to take liquidity and to rebalance imbalances. Okay. So if price has taken liquidity and there is a market structure shift, there is the likelihood that the next thing it's going to do is to rebalance an imbalance before it seeks the next liquidity. Okay. Now we don't know if price is going to rebalance that imbalance unless there is a market structure shift. And that market structure shift has happened on what? The daily chart. So the daily is currently bullish. The daily is bullish as we've broken. That's why I have this blue arrow here. So we've broken structure up there, respected 50% of this order block. And though here we closed below the fair value gap here, but we've immediately closed back above it. So coming into this week, I'm looking at two levels. I'm looking at this bullish order block that has formed a change in state of delivery. As you can see, this bearish candles plus this this bullish candle followed by this bearish move. This form a bearish order block, right? This bullish candle form a bearish order block because we broke structure here, bearish. So as we violated the closing price of that bearish order block, that's a change in state of delivery. Even though we've not broken that high, we have a change in state of delivery right here. Okay, so on the 4 hour, we've broken structure, which is very, very, very clear. Okay, but I'm just basing on the daily to show you what I'm saying, which is this change in state of delivery here. So going to this week, I'm looking at this bullish order block. I'm also looking at this fair value gap as an inversion fair value gap. Good. I'm also looking at this fair value gap as an inversion fair value gap. So either price will come to the inversion or the order block here. Then I'll be looking for buys around those areas. Okay. My first target is here. I'll show you that level. Price is already reaching for it. I'll show you that level on the 4 hour. But I'm bullish for the coming week. First target is this level that price is already reaching for. Second target is this high. Third target is the weekly fair value gap, this line that you have here. On top of it is a daily fair value gap. And I think it's the first fair value gap left behind the daily chart that has not been filled at all. Okay, sorry, this one. The first fair value gap within the daily range that has not been filled. This one was filled and rejected. This one was violated and was used as an inversion here. So the first one that has not been filled or touched at all is this one. So that'll be my third target. My fourth target, 50% of that. So first target is just here. Second target is high. Third target, the opening price of the weekly fair value gap. Fourth target, 50% of this daily fair value gap. So I'll go to the 4 hour and show you how bullish the 4 hour is right now. Okay. So going to the 4 hour chart, you can see we have market structure shifts. We had a change in state of delivery here. We've broken this high as well as market structure shifts. So I'm bullish. We already have our confirmations on the daily and then the 4 hour. All I'm looking for is a pullback to 4-hour levels, and I'll use the 15 minutes or the 1 hour to confirm my entries. As I said, first target is this bearish fair value gap. Okay. That's a very nice fair value gap. You can't just overlook it. As much as you want to see this highs being taken to this level, you can never overlook this fair value gap. Because look at it. You took this high, broke aggressively to this low, other block, fair value gap. Swing high as liquidity. You can never overlook this level. So if you get any entries or you are already in a trade and you see something like this, you should definitely take some profits here. Because price can react strongly around that area. Because that will be liquidity grab into an institutional reference point. Okay. But the bias is bullish. You've taken a long-term low. Price is bullish on the daily chart. So if we've broken bullish here and we've pulled back and we are going up, what's the likely? Yeah.
Yeah, please, which of the long-term low we've taken?
Oh, I show you that on the weekly time frame on the left side of the chart. Let me do again. Oh, come on. Where is it? Here. Yeah, this low. Price has clear liquidity below that support level, retail support and resistance level. Okay. So that's the area that price has cleared. Okay. Long-term position traders, price has cleared all of them out. And then here, they are going to see the same area as what? Break and retest, right? Because retailers are seeing support breaking and it should tend to resistance. So they're going to do this. So as price come back to retest this area, like it did on that candle, and it is selling off. If they are selling, where is their stop loss? Right above this high. Okay. So I strongly believe that high is going to be taken. And that stop loss will be those who are doing break and retest, their stop loss. So break and retest, the retest rejects. Now, once they see this strong bearish momentum, they will see that, oh, price has broken support, retest it as resistance, and given a bearish confirmation. So as this candle ends, every retailer is selling. Every retailer who are position traders who are trading from the weekly and then the daily time frame, they are selling. So we stop losses above that candle. And see how this weekend it just opened, it didn't even go down. It started to push up. It's aggressively seeking those stop losses above that candle. So our bias is bullish because we've taken long-term low. Let me do it this way. It's a very, very long-term low. Okay. So price consolidated. Price consolidated around this region. Consolidated around this region. Took liquidity above that high. And then took liquidity below the lows. So this forms a dealing range. And normally with dealing range, price will pull back to premium to either find support in premium to continue higher or reject from premium to continue lower. So that's a dealing range. So we can expect some bullish moves. And then the daily has shown that willingness. The daily has shown that willingness. Okay. I hope what I explained is clear.
Very clear. Thank you.
All right, you're welcome. So as the daily has shown willingness, and it is even respecting this discount bullish order block, 50% of that order block, we can expect this daily high to be taken. And after this daily high is taking the weekly fair value gap as well to be filled. And if price continues to be strong, you can see price coming all the way to this bearish fair value gap here, plus other block there. That's a very powerful area. But as I said, short-term trader, day trader, you should have short-term targets and long-term targets. So these are my short-term targets here. If price continue to show strength around here, then my next targets will be up there. Yeah, continue.
Short-term target, the price is almost there already. So
Yeah. No, the fair value gap on the 4 hour is my very, very, very short-term target. Yeah, very, very, very short-term. But I mean,
because I'm not
you said you were on that trade.
just have to close
Why?
because 15 minutes was making higher heights all along, and I was having target of that 4 hour high.
You mean you were selling?
No, I was buying to that high,
Oh, okay.
that 4 hours.
At least you should have at least held to the 4 hour fair value gap at least, because that's an area that price would definitely go to. It's like magnets. Okay, definitely price would reach that 4 hour level. So yeah, probably to get to that level, reject and then come back and continue, or to just blow through it all the way to the target. So whatever happens, I only want to buy from discount. Okay, I only want to buy from discount. So I'll be watching to see if price can come to discount levels to give me entry. So the daily order block that I mark is also an order block. This is the daily order block. Okay, so it's also an order block on the 4 hour. Going back to the oh, come on, what am I doing? Okay, so the daily order block here is also another block on the 4 hour chart. Okay, so I'm watching that area is also a breaker block. So that was a bearish order block that has failed. So that's also a breaker block, that area. And then the area on top is also another good area. This area, that will be another breaker, which is almost at the level of this fair value gap as well. And also the daily inversion fair value gap in close proximity with it. Okay. So that very level. So I'm just watching around here to look for possible buys. Okay. So that's all I have. I'll be looking at my chart like this, waiting patiently. When price gets here, will I look for sales? Not really. I like to be inclined with the daily and see how it goes. So I'll be watching, because this is definitely gonna be taken going into the week before any rejection to the downside. If you have any questions, you can ask. If not, we are moving to step index. Okay, step index on the weekly chart. We'll go to the monthly. Okay, step index. So step index has made a new record low. Okay, a new record low. So I think step index have been selling for years. And it has made a new record low. And I was watching one live session of an ICT class, and he was talking about when price makes new record lows or highs. Okay, and he was talking about the record highs that price has made in NASDAQ and S&P, and he was teaching that you shouldn't be picking the top or the bottom. Don't say that you've made a new low, so price is gonna go up because there's a high chance of price to continue going down. So as Nasdaq has made new highs, people will think that now it's gonna come down. It can keep going up, up, up. Just like when Bitcoin made new highs, it went up for some time all the way to 65K before rejecting. It didn't reject immediately after making the new highs. So you shouldn't try to catch the bottom. It means you shouldn't try to predict that, oh, this is the low, it should start coming up. Okay. So we should still be expecting lower prices until proven wrong. Okay. Until proven wrong on the daily or the 4 hour for a short term. That one, even for the 4 hour, may be just a short term retracement. But on the daily, then we can start framing a possible push up. But for now, looking at the stepping this on the, let me get rid of this line. Stepping us on the monthly, we are bearish. On the weekly, we are also bearish. Weekly, we are also bearish, right? And right away from the weekly chart, let me show you what I see. It's clear that the weekly took this high, broke structure down here, sold aggressively, right? And after breaking this low, it hasn't given us any opportunity at all to look for sales. Okay. So I will just be wishing that this week price will push up into this fair value gap at least to give us some possible selling opportunity. Okay. We may as well have a counter trade going down to the lower time frames, but it's just going to be a counter trade and you should be risking very, very less. But as I said, looking at the weekly chart, I'm bearish and I would like to sell from this bearish fair value gap. Okay. That's where I would love to sell from. If price continues to be strong, then we can expect price to come here before selling. But for now, I'm just focusing here. This is a weekly fair value gap and it's strong enough to hold price. Look at this level. There's this huge weekly fair value gap. We came into that fair value gap here. We sold. We came into it here. We sold. Okay. We came into it twice and they all sold. So fair value gaps on the weekly, they are very, very powerful. Okay. They're very, very powerful. So I'm just focusing on this for the week. If we can come there, we can definitely look for sales. And before I look for sales, I would love to see this candle's high being swept as liquidity. This previous week's candle high being swept as liquidity before selling. And if that, go ahead.
If you are considering the fair value gap you are considering, if you take a peek, considering the this thing, is it not in a discount? The fair value gap you are considering selling from, is it not still in a discount?
Yeah, it's in discount. I know. I definitely know it's in discount. But if the market maker still want to offer sales at discount, then you don't have a choice. Because the market maker can still decide to offer sales from discounts. I want to see. I think I'll go to the daily charts. Price does not always come to premium or discount. But when I go to the daily chart, I'll probably show you some examples where they decide to offer price to the downside even when it's in discount. So you just have to be a friend of the market. Price can just tap into this level and sell. It can happen. So I'll have to see liquidity being taken. That's this previous week candle's high to be swept into the fair value gap for a possible sell. Now let's go to the daily chart. So going to the daily chart, we can see a change in state of delivery happening already. And that's why I've marked the highs as liquidity. You can see here, we violated the closing price of that order block. Came down, respected some levels here on the 4 hour, and it's pushing up again. So already, like I said, I want to see some liquidation, these highs and then that high. And then if only it rejects nicely from the fair value gap here. Let me mark that. See that daily fair value gap. And then this line here that you see is the previous week candle high, which forms the low of the weekly fair value gap as well. So let me make it a little bit bigger. Okay. So price can overshoot this high into this and then come and close back below the fair value gap high. So if I see that, I'll see this as liquidity grab of this high into a weekly fair value gap, and it has rejected. So I'll start to look for sales again, if only that happens. But I wouldn't like to see price closing above this fair value gap. If I see that, that could be that could set a stage for a possible move up to come and clear some more highs here, deeper into premium of the weekly range. But for now, tomorrow, Monday, what I want to see is price shoot above this high, come into the weekly fair value gap candles low here, and then reject back and close inside this fair value gap. If only after liquidity grab and I see the fair value gap being respected, then I'll start to look for down prices. But today, my expectation is bullish to see this high being taken. On the 4 hour, on the 4 hour, you can clearly see that we are bullish on the 4 hour. And the target is what I've shown you on the daily and then the weekly. This high and then the previous week high, which is the weekly fair value gap candles low. Okay. Hello. I think I lost connection again.
Okay. Yeah.
So the screen is back, right?
Yes.
Okay.
Yes.
Okay. So on the 4 hour bullish, I'm expecting price to take that high. So I'd like to see Monday price take this high, overshoot a little bit into the weekly fair value gap, and take the previous weekend or high, reject back and close within the fair value gap. Then I will strongly be bearish again to take some lows. I'll strongly be bearish again to take some lows. So that's all I'm expecting on step index. Step index is strongly bearish, like we went through. It's bearish on all the time frames. Bearish on monthly, bearish on weekly, bearish on daily. So yeah, I want to see some liquidation and then continuation in the overall direction. The trend is your friend. The trend is your friend. So here, example of when market maker decides to offer selling within discount. Here, bearish, you have all of these fair value gaps here. Price decides not to come into those fair value gap, rather uses this, taps into it and continue to sell. So you shouldn't be sitting there waiting for price to come here before you look for sales, especially on the higher time frame. If we are looking at 15 minutes, 1 hour levels or 4 hour levels, you can definitely be expecting discount and premium levels. But on a higher time frame, trust me, this higher time frame order blocks, fair value gaps, they are really, really powerful. They can keep price from coming into premium. So you have this fair value gap plus order block. You overshoot. We didn't even hit. Okay, I think we hit the order block at the tip. Rejected. Very, very nice price delivery around that area. And the same thing happening here as well. Broke down, fair value gap, order block. This candle enters the fair value gap, it sells off. Here, you don't have any fair value gap here. It doesn't make this order block reasonable. That's why it's even failing. So no wonder it is failing right now. So the fair value gaps is what makes the order block powerful, okay? So yeah, I would like to see liquidation of that high back into the fair value gap overshoot it a little bit into the weekly level, reject, close inside the fair value gap, and I'll be very, very bearish again down to the lows. So that's my expectation, up to down. Okay. And I'll just be watching price and not do anything. But then I'll reevaluate all this analysis that I've done on Tuesday. If anything has changed, then I also change my bias. If not, and everything is confirming like I've done, then I'll be inclined. So that's how I do top-down analysis Sundays, and I do the same thing on Tuesdays. Yeah, because as I said, conditions can change by Tuesday. The market is not going to go down forever. Okay, if it's going up, it's also not going to go up forever. So reevaluation has to be done by Tuesday. So when the candle opens on Sunday midnight or Sunday midnight, by Monday, Tuesday, the high or low of the week has been created, and the anticipated direction will have taken place, and price will be moving towards that direction already. So if you have an unclear bias for the week for a particular index, you just wait until Tuesday. Things will be very, very clear for you. So just like Forex, according to ICT, you don't want to trade on Mondays. You analyze on Sunday, identify your possible direction for the week, and then you wait for Monday and then Tuesday landing open to verify that bias for you. And then when you get an entry, we call something one shot, one kill. You get an entry on Tuesday around New York time. You've possibly caught the low of the week if it's a bullish week. If it's a bearish week, you've possibly caught the high of the week, and you can hold it all the way through till Thursday New York open. Okay, to capitalize on the weekly expansion. Okay, so that's what we call one shot, one kill. So if only price can come reject around here and give confirmation, and you get this a stall entry, you can hold it all the way to like Friday for one shot, one kill. Okay, because you know that you are expecting we've been bullish. We are expecting the next weekly candle to also be bearish, and we are expecting the next weekly candle to also be bearish. Unfortunately, this week candle was bullish, and it is forming an inside bar. Normally with an inside bar, okay, so there's one thing about inside bar. Normally about inside bar, both the mother bar, so there's the mother bar, okay, and then there's the inside bar, the mother and then the sun. Normally, the mother's head and tails, they are going to be cut off. So the head is going to be chopped off, and the tails also going to be chopped off. So since we are bearish, the anticipation is to see the mother bar being liquidated. So the mother bar candle high. And above that, what do we have? First of all, we have liquidity above previous week high. And second, we have weekly fair value gap or imbalance. Okay. So after that happen, definitely they should seek the low. And possibly this week cannot do all of this scenario that I'm talking about, high to low. You cannot possibly do all. What you can do is you can take the high, reject a little bit, sell all the way to midpoint of this week, and then the following week will continue bearish to take the low. That's a possible scenario. So for now, I was expecting some form of liquidation here. Price can also just use the daily fair value gap here to sell, because that daily fair value gap is resting within 50% of this little wick that you see here. And as I said, wicks are gaps as well. So that wick on this candle's low, that tail 50% is also a gap. And we have a daily fair value gap resting within that gap, paired with that other block, paired with liquidity plus fair value gap. So you can definitely see some weakness after these highs are cleared. to the downside. Any questions? We are done. We are done. We've gone through all of this. We are done. Any questions, guys?
Yes, can you look at 151S? One of the pairs I watched.
151S. 151S. I have to look at it on TradingView. I don't want to mess. I took a lot of time to to make this nice to make this nice chart on MT5. I want to add. I might mess it up, but I'll do that for you. Yeah, go ahead.
Yeah, I didn't know we have and what you call trade view for synthetic.
Yeah, I'll go there. I'll go there and show you. Don't worry.
Okay. Thank you.
I want a question concerning what you've done today. Okay, if you don't have any questions, I think we are done on. We are done on here. Let me save my charts.
Next, can we see how this next Sunday?
Sure. We'll be doing it consistently. We are back. We are back. We are back from the break.
Yeah.
Beautiful. Thank you.
We are back from the break. Even if you can't have it on a Zoom, I'll make a recording to show you what I'm expecting.
Beautiful.
Yeah. So if you don't have any questions, let me save my recording.